United Rentals posted their fourth quarter earnings, in which earnings missed Wall Street estimates. On the news, the stock gapped down. Now, before we get into the technicals, where we're going to do a multi-time frame analysis, where we go to the monthly, the weekly, the daily, let's actually get into the results. So United Rentals reported fourth quarter earnings that missed analyst expectations on Wednesday, sending shares down despite better than expected revenue. The equipment rental company posted earnings per share of $11.59, falling short of the $11.75 consensus estimates. However, revenue rose 9.8% year over year to $4.1 billion, surpassing analyst projections of $3.93 billion. For the full year, United Rentals generated revenue of $15.35 billion. That was up 7% from 2023. Here's what the CEO had to say. In 2024, they doubled down on being the partner of choice for their customers, and he's very pleased with the team's success. Their commitment was critical to achieving the growth they delivered across this past year, which accumulated in the fourth quarter record across revenue, EBITDA, and earnings. Now, United Rentals said it plans to focus on driving another year of profitable growth, strong cash flows, and attractive shareholder returns in 2025. The company's board of directors also approved a 10% increase to its quarterly dividend. Now, getting back to the charts, this is the monthly chart. And my eyes gravitate to this rallying price. You have this one basing candle in aqua and then the rally out. And as you can see, as price pulled back right here, it found buyers who were willing to get long, and price moved up, another impulse move higher. So let's just label this as monthly buyers at $575. Now let's go down to the weekly chart. All right, so there must be some sellers here, probably on the daily chart. The only real level of interest on the weekly chart that I see is going to be this weekly buy level. It's very subtle, but we have this extended range green candle, so rally, two basing candles, and then the rally out. Price comes back. So this level is still valid, where I would anticipate buyers stepping in at the $620 level. Now, before we go down to the daily chart, I am going to highlight this area here. Like I said, I do anticipate that there are some sellers there, and we're just trying to find the footprints of the smart money. So as prices were making higher highs, RSI was making lower highs. All right, so this is the first level that I see. You have a rally in price, basing candles, and then the drop. But it's not fresh. And what I mean by this is it's just reacting to trading to the left. So it is fresh because price never came back to this zone. But it's just a reaction to the trading that occurred to the left. So my apologies. It is fresh because price never came back, but it's just a reaction to the price action to the left. And so I don't put a lot of weight into this level here. Very similar to this weekly level. You have a lot of trading in this basing area, and to the left, a lot of trading here. So it's not an ideal setup, but as you can see, when price came back, it did find unfilled buy orders and then moved the price higher. All right, so for the most part, we're going to zoom back out to the weekly chart. And the chart is suggesting any trading in this price range, you're going to have a balance between buyers and sellers. But as you approach the extremes, meaning above 840 and below 680, you're going to have an imbalance between buyers and sellers, and that's where you're going to see price stop and reverse. So no trade setup at the moment. Earnings were mixed, and right now price action says do not get involved with any type of trades. Wait to the extremes. Thanks for watching. Subscribe. Please like the video.